Welcome to ESGX Live, the community for education and information to inspire collaboration on all things to do with sustainability, with me, Nigel Lake in New York, and my co-host Paul Herman in Paris. It is a very special day today. It is International Women's Day. For those of you joining us from the Asia Pacific region, of course, the International Women's Day was yesterday, and it's a timely reminder, I think, that whilst we celebrate this on a particular day, the action that's needed is needed every day, not just one day of the year. And that made me think back to the start of my own career, it feels like about 100 years ago now, where we had almost 50-50 intake into a pool of chartered accountants at KPMG in London. And I could see that there was no diversity at the top of the system, but it felt like that wave of diversity should surely flow through, and that in 10 or 15 years' time, the top of the business would look very different. Of course, that isn't what happened, and I don't think I should say any more, but hand over to Cassandra Kelly to take us into what is going to be a really fascinating and vibrant discussion. So Cassandra, please join us, and I really look forward to this.
Thank you, Nigel, and thank you to those who have joined us for the discussion today, and indeed you in the audience. And Nigel, I really do appreciate that welcome in terms of International Women's Day and the reminder that it is action every day. That is what is going to matter. Indeed, I looked at some pictures recently from firms who were giving their credentials in a beauty parade, and one of the things that they heralded was the number of women that are being placed into executive roles and onto board roles. And they were quoting numbers like 30 and 40%, and indeed seeing that as a real achievement. And in of itself, it looks like a good achievement. But as you know, in order to level the playing field or to get anywhere near the right representation of women at senior levels, and indeed at all levels, you need to be recruiting and placing people on boards and in executive roles significantly greater than a number than 50%. But we're not here to do maths today on International Women's Day in America and the Northern Hemisphere, but we are here to talk about something else that is dear to all of our hearts, and that is climate action. And today we will be unapologetically talking about what are the actions that can be, should be taken, and I'm super thrilled to be joined by Amber J and also by a dear friend, Rebecca McGrath, and from them we will hear their different perspectives on the concept of net zero, and as we've called it, zero patients, and what they're doing in their respective roles for climate action in this regard. So I'm going to not spend too much time further introducing Rebecca and Amber J. As you already know their CVs, and some of what they do will come up again in their own introductions. So I'm going to start, if it's okay, by asking Rebecca to join me and Amber J. But Rebecca, I'm going to throw it to you first, and welcome from Australia.
Hi, Cassandra and Nigel and Amber J and everyone listening and watching today. It's great to be here. We're in Australia, we're slightly ahead sometimes, so we've already done International Women's Day, but there's some good things and some frustrations too.
And for the rest of the world, Rebecca, sometimes slightly behind. So I think what's exciting for me is you're rarely behind, or even if you find yourself in a situation where you're behind, what I've come to really admire about you is that you swiftly find ways for people to not just catch up, but to go ahead. And perhaps we can explore that a little bit of today. I sort of dropped it in there that, of course, I've known you for years. I've even had the good fortune of working with you. And as I just mentioned, I really do continue to admire what for me is a constant focus on strategy and action that is implementable and achievable. We all know that there are those dusty packs that can sit on shelves that they may have cost a lot of money or taken a lot of time to dream up, but you can't actually get along and do anything with them. So you are somebody that I truly admire in your ability to keep everyone, even whether as chair or in your executive role prior, keep everyone focused on what it is that they can actually achieve. And with your various board roles, I guess some part of what we would love to hear today from you is what have you when you've gone onto your boards or when you've taken on a role, whether as director or a chair, how do you take action? What is it that people can learn from you? Are we making too many excuses? And is there anything recently that you might have done that maybe we can take heart by and inspiration from?
Sure, Cassandra. Look, getting into the topic, I think it's actually become a really significant employment issue. I think in Australia, certainly, I think I can confidently say business is leading the way with regards to climate action, and community and consumers are right with them. So there's a group I haven't mentioned who are lagging, and certainly at my personal view, at the federal level, the government is lagging, and I think they're finding that the community wants more action, and that's a really it's sort of exciting place to be, because it's real sort of democracy in action. So for me as a business leader, I just see that action on climate change is a front and center responsibility. And I live in Victoria, which is in the southern part of Australia, and right now New South Wales, where the famous city of Sydney is suffering the most shocking deluge of rain that anyone can possibly imagine. People who live on hills are being flooded. People are drowning in floods in Queensland and New South Wales in urban areas. This is not people all out in remote areas. This is people drowning in urban areas because the flooding is so extreme in a way that no one can imagine. And only 2 years ago, we had fires, and the community is horrified and the community wants action. And I think business has played and must play really important leading roles. So as a member of the community, but also as someone who can influence in larger corporates that I'm involved in, I feel like it's a moral obligation as well as a huge opportunity to make a difference. And that's why I'm acting and I'm leading as best I can. And that's why I'm really happy to come along and talk about it today, Cassandra.
Now, I think if I've remembered correctly in our chat the other day, Rebecca, you said that one of your boards in particular has just launched a decarbonisation plan. Is that something you could share with us today?
Yeah, sure. So I'm the chairman of a mining company, and we mine copper in Australia predominantly, but also in Brazil. And copper is a really, really important element in electrification in the world. It's so core in so many of the battery-operated, battery-powered vehicles that people are buying. It's important in renewable energy. It's playing a really important role. So copper and nickel and many of those elements are absolutely critical to electrification. The challenge for us then is to do that in an environmentally sustainable way, because a lot of people think, well, mining, boo, hiss, we don't want mining because that's destroying the environment. And I understand that sentiment, but I also truly believe, and I haven't come from a career in mining, I come from the energy sector, but I truly believe that miners can play a really, really key role in how they operate. So getting down to the sort of emissions, the direct and indirect emissions, but then what they produce and how they produce it. And then you get into the sort of what's called scope 3 emissions, the products you produce, the way the customers use the products you produce, and everything in your supply chain. And so this concept of scope 1, 2, and 3 emissions, I think all businesses have to get their head around if they haven't done it already, because understanding the impact that you have as an organization, as an investor, as a company, that classification of scope 1, 2, and 3, and I'll use the word audit, but actually that might sound a bit scary, but you really need to understand, and it takes more effort than you can possibly imagine if you're a bigger company. Even if you're a small SME, small medium enterprise, it takes a lot of work to really understand the true scale of the emissions that you are responsible or accountable for under that scope 1, 2, and 3 definition. So I think that's a really fundamental language that I think everyone is now using, and it's a really good way for stakeholders to engage with companies like ours to say, tell us what you're doing. So what we've done at Oz Minerals, which is this copper mining company, is that we've spent quite some time really understanding our own emissions and our scope 1, 2, and 3 emissions. And what we've done, rather than setting a top-down corporate target that the board and the executive came up with, we've decided that to really take account of all our activity and engage our whole organisation in this challenge, we're going to develop what we've called a decarbonisation roadmap, and we've done that from bottom up or asset level up. So every single person in the organisation knows what we're doing, all the management and all the teams have it in their objectives, and they have specific measures. So it becomes part of our operating model. So we've just launched this decarbonisation roadmap, which we believe will be quite transformative to our business. So it's got some pretty challenging things built into it. You know, electrifying and automating underground mining is not it's not a moonshot, but it's pretty challenging. And it's the sort of thing that actually really excites people, because you've got a whole lot of technical, engineering, and other skilled people. They find those sort of challenges really exciting. So that's another way of engaging people in doing the right thing and taking responsibility. So that's what we've been doing, Cassandra, and I'd be happy to talk more about it later.
That sounds great. I am keen to discuss a few things later. One of the things that I noticed, it's in the chat, and I know that you're not shy when it comes to reporting and financial statements, and I don't know if you're comfortable still with a rather older hat on to talk to, it was Chris Bowen, I think, who wrote that he was keen to hear views on sort of preferred reporting standards for ESG reports. You know, so things are simple yet effective. He's written GRI, SASB, or others. So I don't know if you have any comments in general about how much reporting or ESG reporting has impacted your decision making, or if you've been lobbying or advocating for a particular format of reporting.
Sandra, it's one of those areas which is emerging and quite complex and dense. So if you're a company, no matter how committed you are to action on climate change, reporting is a very complex field. And I think, and I don't want this to sound defensive, but there are so many ways, benchmark indices and reporting standards that are out there, that it's actually a bit of a forest for us. And we want to get on with doing the work. And so what you'll find is that companies will choose a few. Now, they may choose those that suit them, and maybe they choose the ones that make them look good. But at the end of the day, you'll find companies are tending to choose a few different ways of reporting or reporting standards, so that they best and clearly articulate their actions and the type of business they're in. So if you're in an industrial, energy intensive business, there is certain ways of reporting that are more clear and understandable than, say, if you're in a consumer business where you might have a lot of scope 3, for example. So we have found that the reporting and framing and analysis that we've done, we found the TCFD framework to be globally endorsed and very commonly used in energy intensive industrials. So we are very comparable then, and investors and shareholders and other stakeholders can clearly see how we're performing against others in our sector. Then there's a large number of indices linked to the US and Australian stocks. We participate in a few of those. I'm not going to name them all. Some of those we opt in, and some we're in whether we want to be or not. And then I think the Accounting Standards Board has now released, and there's going to be some strong commitment around sustainability reporting in that respect. And I think that will become a baseline for the more financially or accounting related measures, which I think we need a common language for, and so I'm very much supportive of that. I think the other one, which a lot of public companies are endorsing, which goes well beyond climate change, is the UN Sustainable Development Goals. And I think that is a very good way for companies to illustrate clearly the areas where they have impact on sustainability and the areas that they're going to focus their action, because you're probably not impacting all equally, and there are certain areas under the Sustainable Development Goals where you can have the most positive impact. So calling those out and defining actions that you're taking against those, I think is a very good way also for investors or other stakeholders to analyse and understand where your actions are. And there they are. Thank you.
Fantastic. I'm going to do something I didn't think I was going to do, which I'm actually going to bring Amber J on now, if that's okay. Amber J, if you can just turn yourself off mute. And I'm going to, in order that you can also add to that answer, I would really love it if we can do just a little bit of background on you so that it's within context. I guess the perspectives and the experience that Amber J are sharing, and that's the point of ESGX, is that we come from different perspectives. So there's the board hat on and former executive, but with Amber J, I had a conversation with her the other day, and what I absolutely loved is the investment manager perspective as well. And I think, Amber J, you said to me the other day, and it really struck a chord, and I've written it down, so I want to get the quote right, and you can correct it if I didn't quite write it, but it was, both the environment and our society are themselves assets, and being able to understand that and how to maintain the equilibrium of those is for you the true essence of asset management. And so if I represented you correctly there, that was a really profound quote for me. And I guess what I'm looking for is maybe before you go into, because I've got other questions, I want to ask you, but before we go into some of those, could you maybe explain a little bit about your background and then go straight into the ESG reporting perspectives that you have as a result?
Sure. Thank you for having me. My background is actually in sustainable investing. That's what I've been doing since about 2007, whether in private equity, public equity, and everything in between. I have worked at large broker dealers. I've worked at small fintech startups, and of course, currently in my position at Etho Capital. So I suppose when I talk about asset management and the environment and sustainability, to me, I'm thinking about it from the perspective of perpetuity, right? Like, we're asset managers, we're asset owners. We're trying to both protect wealth, right? That we've earned through our through the financial markets, but then also help find opportunities to help grow wealth. And and of course, everyone says that that's what they're doing. But in order to do that effectively, you need to understand the relationship between our environment and our economic system, right? We have an economic system that's perpetuated, or that sort of perpetuates this idea of limitless growth, but we're doing that in the face of finite resources. And so, economics as a discipline, as a social science, is first and foremost concerned with how to manage a limited amount of resources most efficiently. And so I think by bringing that alignment back in to the financial services industry, which is my industry, we can, and challenging companies like Oz Minerals and others to manage the broad array of both environmental and social impact risks that their business activities have, we can then achieve that equilibrium, achieve that balance. And of course, what we found at our firm is that when we choose the companies, when we select companies and add them to our indices, add them to our other investment products that are managing those risks, scope 1, 2, and 3, of course. Scope 3 is the most important, in fact, because it accounts for upwards of 80, 90% or more of a company's total emissions, downstream, upstream, et cetera. Then we're able to actually find that the companies that manage that most effectively actually have greater operational efficiency, and that leads to stronger stock performance or it has led to, in our experience, right? Not always. Past performance is no guarantee of future results, but it has led to, strong performance for us, and the investment products that we choose to build in the financial markets. Now, on the reporting side, I've heard a lot about, there are so many different kinds of reporting standards, right? As Rebecca was saying, and that can be very, very frustrating for companies. I think what is needed is actually a global standard, the same way that we have a global standard in terms of, well, actually not even accounting really. We just need some sort of global standards, right? Like we need to make this as easy and relatable as possible for businesses, so that way we can get the best data possible, and then comparability of data across the board, because that's been a really big challenge on the investor side. It's not just that companies are giving us a bunch of information. It's also, how do we take this information from, whether it's from the GRI or from Global Reporting Initiative, just for those people who don't know GRI, or Sustainable Accounting Standards Board, SASB, or the EU taxonomy, or the addition to the EU taxonomy, which includes PAI, the principal adverse impacts, right? So you're measuring not just the positive that you're doing, but also the negative impacts, and finding the balance between those two things. I think that's tremendously important. And for me personally, right, what I actually have seen, the reporting standards that I found to be the most compelling and most robust have actually been the ones put forth by the EU taxonomy, and that including the principal adverse effects, principal adverse impacts. With that said, TCFD's, the reporting has had a lot of buy-in, as Rebecca mentioned, and has carried a lot of weight. But those reporting standards often do not include or demand, a look at scope 3, which again accounts for the vast majority of emissions. And so while people are, they're counting what's easy instead of counting what's necessary. And I think that's the biggest problem that we have when we're thinking about how we're going to get to net zero, how we're going to get to actually, how we're actually going to achieve our sustainable development goals, if we're not actually measuring what matters, right? That's effectively what ESG investing is all about. It's not just about, managing what you're measuring, or saying you can manage what you measure, but it's also making sure that you're measuring what actually matters, and that actually has an impact. And so I was really pleased when I heard Rebecca say, yeah, we look at scope 3 too. I was like, yes, like you never hear that from a mining and metals company generally. And also, like what she says about copper and nickel, it's very important, right? It is important. Like we can't just say, oh, you can't have mining and metals because, it's a dirty industry. That's not the conversation. The conversation should be, okay, what are the negative impacts of this business activity, and how can we bring them in towards, how can we make sure that they are focusing on sustainability? In the case of mining and metals, you obviously have the water risks, right, which is huge. And then of course you have the social aspect, which of course is labor. So those are like two out of a multitude of other issues, but I just want to, just broad base. And so looking at that, when you're looking at a mining and metals company and looking at other issues as well that are material, right? And that's where materiality comes in, not just like a broad baseline of what companies think are important, or, what you might want to know about a company, but also, is this financially material? One, and also, is this, how does it help us achieve our sustainability and our social impact goals? And I'll stop there, but yeah, that's my perspective on reporting.
Give you a chance to drink from your water bottle, because I've got another passionate question for you coming up, but I'm going to turn it to give you a chance to take a breath while I speak to Rebecca. So thank you very much for that, Anjay, and there is more to come. So Rebecca, I know, given that what we're hearing, and I'm going to ask Anjay a question of sorts similarly, but with your board hat on, was there a turning point? What was the point at which you went, we just can't, and this may not be the language, was it, we can't ignore this anymore, or we really believe in this now, or what makes a board, or what would you urge a board, if they haven't already turned to this point? Was there a moment? Was there a discussion? Was there a measurement? What happened?
Question, Cassandra, and I think it really comes with a like-minded view about risk and about stewardship. So, if you're on the board of a public company, you're there to steward the company for a period of time, but you're making decisions, or you're endorsing a strategy of management that should transcend your time there. And so you're making, you're setting things up for the future as a steward of the company. And I think that sort of sense of responsibility is at the heart of a lot of the actions a company takes around ESG. We're not just there for the short term. We want the company to endure, and we want it to be sustainable in all elements. And I think, you know, for a lot of company directors in the resource sector, you know, the amount of information that we have at our fingertips about climate change, the amount of information we have, an inquiry we have from our investors and from activists, they all converge to a point where whether you're a sort of laggard or you're a leader, a boardroom cannot ignore, I would have said, for the last 5 to 10 years, a really deafening amount of data, information and opinion about change. So I think for us at Oz Minerals, we put a lot of focus on purpose, and our company purpose is going beyond what's possible to make lives better. And those lives are the people who we affect and we work with, our traditional owner communities, our employees, all of our stakeholders. And so we want to offer people amazing careers to do amazing things and going beyond what's possible. Okay, it's a contradiction in terms, but when you're working in a technical industry, there will be a lot of people who say, well, that's not possible. So we want people to join us to believe that they can do things that are determined in the past or by others to be not possible. And so having that aspiration, having that purpose, and then an aspiration, which we've had for some time, which is to emit 0 Scope 1 emissions, and then systematically reduce Scope 2 and 3 across the value chain. So that's been our aspiration for some years. And that's something the board very much engaged in and endorsed. I think the rubber hit the road, and this is, you know, this is a construct that people who hold offices in public companies are dealing with. You're making commitments about the future of the company where achievements will have to be delivered or objectives delivered, and you won't be there. So this is a significant legal obligation under the Corporations Act in Australia as well. Now, I'm not sure how that works so much in Europe and the US. I suspect that commitment is very tangible, but you know, the company will be held to those public targets in whatever year that might be, 2030, 2040, whatever it might be. So there was a lot of debate and analysis done. The board wanted to make sure that we were committing to something that we are confident that we can deliver, whether we're there or not. And so it comes back to stewardship, it comes back to doing the right thing, but it also comes back to really understanding those direct but also indirect and Scope 3 emissions. So effectively, you know, organisations like Oz Minerals and its peers, we need to change the industry if we're going to really change the impact of, as Amberjay said, Scope 3, because that's about your products and your customers and your supply chain. And so issues like circularity, recycling, using renewable energy, your customers using renewable energy to process your products. And, you know, if you go back 5 years, people would say, well, you can't tell them what to do. But, you know, we all know that influence, persuasion are working together, and believing that, you know, we're going beyond what's possible can create really substantially different outcomes. So that's the way we came at it. And I say that probably the last thing I'll say is that, you know, again, in Australian reporting requirements, we are, as a public company, required to identify the key strategic risks for the company. And I think that really brought to a head probably some debates in some boardrooms 5 to 10 years ago, which is, where is climate change on that list? You know, you're talking about, commodity market volatility, you're talking about project execution, you're talking about attracting good talent. Where's climate change on that list? Because climate change will have a physical impact on your operations, but it will also have a financial impact on your operations. And if it's not on that list, and at least, you know, climate change is one risk, actually, when you unpack it under those two headings, it's a whole range of risks. And dare I say it, it's a range of opportunities as well. So I think that maturing in understanding and talking about climate change as a risk has made boards become much more alert to it and given it a lot more time, effort, and substance. And as a result, we're seeing some high-level corporate things about 2050, which I think, by the way, is becoming boilerplate now. I don't think 2050 will cut it for much longer. We're seeing claims about greenwash, companies saying we're going to do this, but they don't have a plan to do it. So I think investors and stakeholders will continue to challenge boards and management to say, maybe 2050 isn't soon enough. And by the way, show me or tell me about your plan to get there, because, greenwash is real, and we want substance. And if we're going to invest in you, we want to see the how, and maybe, something more granular than a plan or an aspiration for 20 years' time, which, by the way, is when none of you will be here. So just to finish off, I think that the challenge for boards is to set in train things that I suppose are not, maybe I'd say unstoppable, but they're unstoppable in that they've been committed publicly. They've been committed to the market, and therefore you can decommit, but as we all know, in a fairly aggressive public markets environment, decommitting is not a good thing to do, and certainly not a good thing, the right thing to do around climate change.
One final point that I just want to pull before I move to Amajay again would be, you mentioned customers, and I was speaking the other day with one of the, for those international in Australia, there are two very significant food retailers. And at one point in time, they went sort of the whole retraction of plastic bags was promised, and they were going to go out at a similar time and do it similarly. And just as the day came, one went ahead and continued with the plan, and the other one retracted and went, we'll keep them going a little longer. And the reason that they did that is because a very substantial amount of customers moved away from the brand that went and removed the plastic bags because it was inconvenient, and shifted their business to the other one. So I guess that's a horrible story for where sometimes the consumer isn't yet your friend and isn't always leading the change. And I wonder, or customer, and I wonder, in your regard, you did refer to customer. What role does the customer play for you? Is it something that you relied upon, or is it an added benefit, or sometimes a detraction? What is the role for you on your boards in terms of the customer?
Yeah, it's a great example of, I suppose, the role the board and senior management have to play in stewardship, and saying, you know what, we believe this is the right strategy, and we're going to take some pain in the short term, but we probably need to back that up with more communication, education about why we're doing it, and what the impact is of not doing it. And so, long-termism here is, I suppose, to me, what I take from that. You can't always react to short-term pushback. If you've got the plan, you've got to find a way to deliver it. And probably what's missing is the education, the messaging, and the substance. My example, probably, I'm involved in commercial and industrial property, and the part of the scope 3 there is the tenant or the client that occupies your building. And at Investor, we go to great lengths to work with and partner with. We have panels and brown bag lunches to talk to our tenants about the sorts of things that they want to take on with their employees, because most of our tenants are corporates in themselves. So what do their employees want them to do around taking action on climate change and reducing emissions and reducing waste? And what they find is their employees want to have composting. They want to have, much more energy efficient lighting. They want to do all these things, and they're just opening up a great sort of floodway of employee passion about sustainability. So then it comes back to us, and they say, yeah, we want to do all those things. We want the lights to go off. We want this to happen. We want to only rent 5, 6 Green Star buildings. All these things come back. So it's amazing when you engage in what I call your customers' customers, because I'm not in the consumer goods, retail end of any business. I'm very much in the sort of B2B. But understanding and engaging with and seeing what your customers are doing and what they think and what they want is a really good way to create that energy around climate action and then addressing it through the channel of your customer.
Absolutely brilliant. And I can see Roden's written you a secret squirrel message thanking you. And so far, just really insightful, very practical and pragmatic. I think we need more no nonsense, more plain speaking. So thank you for your comments so far. And I know that Amber J's not shy to say what she thinks. And I really want to step back, if that's okay, and ask you personally, Amber J, just why? What is your personal, beyond the corporate mission? What was the moment, or what happened to you to sit there and go, I just have to? Of all the things you could have done, why this? Why now? Or why then?
Well, I'm a biological creature and I depend on this planet to sustain my existence. So that just made a lot of sense to me, just practically, to care about these issues. But I think if you're looking for sort of an aha moment, I think for me, it happened when I was in graduate school, actually. I've always been interested in issues of social justice, social impact, environmental justice, et cetera. So it wasn't a big leap, it just seemed logical to me because I understand the relationship between the life and social sciences and the world around me. I'm very observant in that way. But I think what brought me to finance in particular was actually the time that I spent during my master's practicum in East Africa and in New York, but looking at working with NGOs, trying to figure out how to, what I thought was, build economies of scale in developing countries and just sort of looking at sort of the realities on the ground in food insecure countries and places where, where people, spend the majority of their day just, walking to get water, things of that nature. And so what I found most often was that no matter what NGO or even government organization you're working for or working with, the common factor that they were missing was capital, right? So everyone's looking for investors, everyone's looking for capital so that way they can scale their programs and help people become more sustainable in terms of being able to actually grow the food that they want, that they need to eat, because some of the countries I worked in were primarily subsistence, right? So you grow what you eat, and if you don't grow anything, then you don't eat. It's pretty basic. And so everyone's looking for investors, and I thought, well, if the financial markets are where all the capital is, then why don't I just work there and try to leverage the resources there to bring, to help create the kind of environmental and social change that we want to see and that we know was necessary. And so I guess that was sort of the moment for me when I was, a long time ago when I was in graduate school. So I guess I guess if I had to point to a time, that would be the time where this became more than just, the passions of a young 20-something and a vocation, like a calling, if you will. Not calling, because that sounds very strange, but just sort of, I'd learned how to turn my innate passion into my career path, I guess is the best way to say it. Yeah.
In terms of this segment, and I don't know if that's how you refer to it, but the investment segment, with what you've seen, have you seen much evolution? Do you expect there to be much change going forward? And I'm also curious to then dig a little bit into your approach. If you want to do that within that answer, go for it. But, qualitative versus quantitative. But I'd really love to hear a little bit about what you thought versus what's actually happening and perhaps what you think might happen going forward. Sure.
Well, when I started out in sustainable investing, it was very much the purview of ultra high net worth institutional investors, people who could afford and who had access to the different kinds of products and services, to the customization, to the specialized products and services. And so as a young analyst, my first focus was actually on trying to build, and they had this demand, but then, how do you build what are the methodologies? How are people approaching this? And it was before, MSCI and Sustainalytics became the behemoths that they are now. where, you know, they spend a lot of time buying up a lot of the smaller shops. So I watched the evolution of ESG reporting over time, over my career. You know, it's funny to think about how long I've been doing this. In any case, it makes me feel very old. No, but just watching sort of the changing, there's been a couple of changes. There's been change in terms of acceptance in the industry. When I was first starting out as an ESG analyst, you know, no one thought that that was a real thing. They're like, what is this sort of, you know, granola, you know, like sort of crunchy kind of perspective. We're here in the financial markets, we're here to make money. The tagline was always, you know, you have to compromise your performance if you're going to care about the environment or if you're going to care about society. And I just spent a lot of time dispelling that through my work and through my research. But of course, because there wasn't a lot of, you know, it wasn't a huge industry, or at least, you know, it wasn't very widespread, that means I had to spend a lot of time developing my, you know, learning about every single industry that I was expected to cover, and then learning what those risks were. And so I was a part of the SASB working groups. I was a part of the GRI working groups. I was a part of all of those, you know, the IIRC, you know, the part of all of those early reporting framework, you know, creations. I was a part of, you know, different communities of other ESG analysts, just trying to understand how other people were looking at it, and then improving on that, right? And saying, okay, how do I do this? Mercifully, I'm an interdisciplinarian, so that worked well by academic training. So it doesn't, you know, one day I'd be writing a paper on, you know, water, purchasing power, you know, purchasing power agreements for water, and then the next day I'd be writing about sustainable agriculture. So, you know, it was always just taking a lot of information, synthesizing a lot of information, and making sure that I'm recording what's actually important and what's material. Fast forward to, you know, the last 5 years, and suddenly ESG is on everyone's lips, right? And so I'm like, wow, that's so interesting. Tell me more about how the environment is important to pay attention to, and how resource use, you know, can help you make business improvements. And it's been interesting to watch. I'm by nature, I'm a pessimist, which is great because I'm only ever pleasantly surprised, which is what I always say. And so I think I've been suspicious about some of the larger entrants into the space, in particular, just because of the greenwashing, like Rebecca mentioned. And I've seen it, you know, like you'll see a product label with ESG, but you'll find, you know, but they're still trying to hug a benchmark. And so, and that has a lot to do with a couple of things in the financial services industry in particular. One, you have this focus on short-termism, right? The quarterly earnings cycle, which is just kind of a charnel house for people. You know, it doesn't allow businesses the space to really plan and to be the stewards that they need to be, right? And to set goals long-term. As Rebecca pointed out, you know, goals out to 2050, you're not going to be there. So what do you care, you know? And like, what kinds of liabilities are you exposing your company to at that point as a result of making those kinds of commitments? So there's short-termism in the financial markets, which is a problem. But then you also have a lack of, you know, there's a lot of data and information that's available, right? Everyone says, oh, in the technological age, information's available, and that's true. You know, like we have access to so much data and information at our fingertips, but do you have the right skill set? Are you a subject matter expert? Can you actually provide the correct synthesis of that data? It's not enough that you can just sort of look at, you know, a metric. Do you understand what that metric means and how it can translate into actual performance, either from, you know, or improvements for a company from an environmental perspective, social perspective, financial perspective? And so at ETHO, you know, we're all subject matter experts. You know, our CIO is, you know, he's an earth scientist, right? So it's earth science, it's all, you know, it's climate change. You know, he calls himself a climate geek. You know, we have machine learning experts, and we have, you know, mechanical engineers, and, you know, me, I'm the social scientist. So me, it's all, you know, it's all politics and global economies and things of that nature. And so we bring that lens to how we evaluate and how we assess companies, and also the companies and industries, right? Because it's not just the companies, but then also looking at geopolitical events, especially when you're getting into, you know, investing in other countries. And of course, you know, when you're looking at emerging markets, you also want to look at sort of the debt that exists, you know, on the, you know, sovereign debt, and the issues related to IMF, World Bank, it's all related. And so we understand that, you know, it's a 360 view. And that's sort of how we, well, it's not sort of how we look at it. That's exactly how we look at it. I mean, so I guess that's that's the short, that's a long answer. But I think what I like about the fact that we're having these conversations and that you have these bigger players in the market is that it's forcing everyone to take a look finally, right? When you're some small shop like ours, no one, you know, we make a statement that's completely true and absolutely important, but no one pays attention to it unless, you know, Larry Fink says something that's kind of, you know, the same, but also not quite good enough, you know, so you have like this really weird mix. And I sit on a couple of boards myself. In particular, I'm on the USCIF, which is the Social Sustainable Investment Forum here in the United States. And we spend a lot of time, and they're a policy and advocacy organization. And so it's all about trying to create, it's a professional association focused on creating the right conditions for sustainable investors to actually have a voice, you know, in civil society, but also in the government sector, right? So that has been that's been hugely important for the genesis of sustainable investing and how its growth in the United States in particular. And so I get to look at it from a policy perspective, then I get to look at it, you know, from my own company perspective, and of course in the research, which is we're all researchers at my company, so that's where we really like shine. We like to dig into the weeds, but effectively, not everything that calls itself ESG or sustainable investing is, you know, and I think the challenge that we're seeing in the industry is that there's a lot of lip service, you know, and so just having to be really, really cautious and thoughtful about how you approach it.
Yeah, no, absolutely. And there's been a lot of support in the chat for some of the comments that you've made. And you actually touched on AI and tech in your discussion. And I know that when we were talking, as you were saying, a lot of the tech that's needed in order to impact the change or make the change possible and real doesn't yet exist and or has not yet been funded.
Right. Right. So, it's a good point. So, like, I did say that I was actually talking about net zero commitments because a lot of companies, you know, as Rebecca mentioned, they're a lot of press releases about, you know, out to 2030, out to 2050, we're going to do this, we're going to do that. But ultimately, the tech isn't there yet. And so if you really want, I think, and the reason it's not there is because I work at, you know, like the research that we do is primarily public markets, although we do private market research on, you know, as bespoke, you know, customized basis. But really where you're going to see the technological innovations are in the private equity sector, you know, because that's where people can play a bit more. They have the resources to be more daring, to be bold. And so there's a lot of small companies out there that aren't publicly traded that are developing the technologies that will need to get us to net zero. They just need that investment. And so if I were, you know, in the private equity sector, that's where I would be spending a lot of my time, like unearthing those technologies that haven't yet been brought to market, because that's where we're going to get. That's how we bring. Or even if I was a business, right, like a large company that were making investments, let's say a mining and metals company, I would be looking for those smaller enterprises that will actually help my company achieve the net zero commitments that I've made, you know, and make sure that we give them the resources and support that they can then develop the technologies that are necessary, right, to achieve those goals. And so, to me, that's where I'd like to see a lot of growth. Otherwise, you know, we're just going to spend a lot of time talking about carbon trading, and we're not going to get there with that. You know, it's not going to happen. So, yeah, I don't know. We need a lot of tech innovation, but we need investment in that tech innovation.
Absolutely right. And that's there's actually been a question from Roden some moments ago in the Q&A, and I'm just going to go to that now on the back of this. I might start with you, Rebecca. Roden asks, you know, mining and energy in Australia have extraordinary tech capabilities and enablers, from AI, robotics, smart engineering and automation to environmental services. he asks, how can we use these enablers to support manufacturing to retool to go circular? And what's the role of government in accelerating such a rollout, especially obviously cognizant that there's the upcoming election?
Thanks, thanks Cassandra, and thanks Rose. There's a lot in that. I'll try and cover some of it. It's a really nice segue, and Ambajay was talking about the tech enablement of, addressing climate change, and there's so much opportunity. So something, I feel like this was you opened the door for me to promote something that I'm really proud of that we've done at Oz Minerals. I suppose at the heart of it is one of our strategic elements is partnership. So rather than seeing this, automation and technology and particularly in relation to reducing the impact of climate change, we don't see it as a competitive thing. We think it's a huge opportunity to collaborate. So we created this thing called TAD, T-A-D, which stands for Think and Act Differently. And it's basically an incubator where we partner with all sorts of people, ranging from groups of undergraduates or postgraduates at universities around the world to individuals who just really geeky about one really exciting thing, and they're working literally in their back shed, through to consultancies and companies. We've got all these amazing partnerships around Think and Act Differently. And TAD is, if you want to have a look at it, it's divided up into a whole lot of opportunity areas, or if you like, problem statements. And we've got all sorts of people working on different problems to solve. One of them is called ingenious extraction, because one of the great challenges of metals and even energy metals is we assume that smelting and, high energy processing, or processing that uses a lot of energy, is the only way to produce the end products that go into batteries and renewable energy and all the uses it has. So what sort of ingenious extraction methods are there out there that we don't know about, that we want to collaborate with you on? And the results are just mind-blowingly interesting. And, I could probably babble on about them for ages. One of those, though, is called the electric mine simulation. And we've partnered with a whole lot of other mining companies, which is great. I know Newcrest is in that group as well, a number of other Australian, South 32, and then suppliers, OEMs, to come up with a whole range of ways to enable underground mining being totally electric. And I was just checking the data. We've had 179 participants from 36 countries put together ideas for a full electric mine. And, the crowdsourcing around that initiative and all the other TAD initiatives just shows you that, going beyond what's possible is something that a lot of people are excited about. When it comes to reducing energy intensity and energy use, there's so much passion, interest, but also know-how. And so that's why I see TAD for us and our industry as a really great way of harnessing those things and bringing them quickly to application and to use. I mean, our decarbonisation roadmap is reliant upon us electrifying all our operating fleet. And that means everything from underground boggers, the big machines that collect all the blasted material, right through to taking, trucks carrying material on the road, all that fleet and every support vehicle, watering trucks, everything has to go electric. And for some people, that is beyond what's possible. For other people, and the great thing is a lot of people find that very exciting and challenging. So we found it an incredibly powerful employee value proposition that we promote and support the development of these sorts of incubator ideas through crowdfunding. And that's not something that the mining industry has traditionally embraced. It's been very much closed shop, partnering with individual OEMs to come up with something proprietary that no one else can have. And I think, you know, if you look into the wider tech sector, we've all realized that that's not success. That's not the path to success, is taking everything in-house and proprietary. So look, how does government support that? Look, there's a lot of ways, and I think the state and the federal government's getting a lot better at supporting innovation. A lot of it's getting out of the way. There's obviously tax breaks, there's bringing groups together. One last thing I'll say, because I know we're running out of time, is in South Australia, where most of our operations are, there's quite a, some of the people online will know there's quite a growing space industry, space-related industries in South Australia. Now, I have no ambition to mine space, so don't take that the wrong way, but the sort of technologies and innovations that are linked to the space industry challenge so many of these fixed assumptions about the mining industry, the sorts of materials you can use, the way you can apply robotics, the way you can apply artificial intelligence. So we've had some really amazing discussions collaborating with people in South Australia who are working in space-related industries and incubators. And that's been supported and enabled by the state government there. So there's lots of ways that governments can bring people together, as well as, you know, provide financial incentives. It's getting better, but it's still really hard work. Thank you.
Thank you very much, Rebecca. And we are indeed conscious of time. I've just put a note to everyone in the chat in terms of can't take any more questions, but there is one that's been sitting in there for a little while. And I did turn around actually a moment ago to look on my bookshelf for Ira Kaufman's book. He has asked a question, which unsurprisingly, given that his latest book is around empowering us, and he talks about from crisis to strategic harmony. So I'm not very surprised by his the tone of his comment. I'm going to start with you, Amber J, here, which is, you know, how do you as an investment leader align with what he calls next generation climate activities to create this sort of one voice to pressure standards and change and accountability that will effectively force business to redefine success and activate, as Rebecca has wonderfully shown is possible, sort of to go beyond talk to actually sustainable decisions and sustainable actions. So again, how do you align with that, and how do you, I guess, how do you use your influence?
No, it's an excellent question. I mean, that's one of the other reasons I got into financial services in the first place, is just because when you have ownership, right, you own the asset and you have a voice, particularly in the public markets, obviously in the private markets, but less so, I find, depending on, how much you own. And that's why it's really important for companies like mine, which are still really small, to, continue to gather assets, so that way we have a stronger ownership voice. And when we have that ownership voice, what we're able to do then is have a seat at the table. It's one of the reasons that, that's how we do it. Like when I look at some of the asset growth and some of the largest asset managers on the planet, right? You take the big three like Vanguard, BlackRock, et cetera, and the tremendous amount of assets they have, that also gives them a tremendous amount of influence, right? They have a huge voice. And so that's always been a really big part of what I do at ETHO, and what I've done throughout my career is just making sure that we gather assets, speak with our clients, and then make sure that we are championing those next generation climate activities, right? On the one hand, but then also in business activities, but being able to do so with some level of authority. So I'll keep it there. I think that's wonderful.
And just to wrap up, Ma'am Jay, while I've got you, with your hat on with what you do now, mm-hmm. One thing that ESGX is very important to and very proud of is the need to not just for people tune in and listen, not again to be part of a talk fest, but actually to join in because they're part of the system of change, part of transformational. They're actually looking for more that they can do and more and fresh ideas. So with your hat on, and then over to you, Rebecca, one of my final question to you both is, what can people listening do from your perspective, Amber J? What action can they take?
Well, my answer is always going to be invest.
Just
obviously, if I need you, Paul, you'll jump in.
You can invest. You can. I think information and education and sort of having conversations is a big part of it too. It's not enough to just be like not everyone can afford to be buy organic all the time, or, be super deliberate about how they choose to consume. But I think it's important to, as Rebecca was saying about sort of the electrification, especially on the downstream, if all of your gadgets are, have solar panels on them, or, are solar powered, but your electricity is, coal based, right? Like, what kind of conversations are you having with your local utility providers? What conversations are you having with the federal and local governments, right? Because I think that's a huge part too. I think civic engagement is huge. Civic engagement is a huge part. Like, I know that sounds sort of trite, but it's not. I think people say that it is, or they have that feeling like they can't make a difference. But honestly, you have to be engaged. You have to just. Society isn't a spectator sport, right? Like, you have to be involved. You have to take action, whether it's through your investing through your wallet and through your voice. And so I find that those are the two ways that I do it. That's how I do it. It's the only way I can do it. I go to the city council meeting and I raise hell, otherwise nothing gets done. And it's just, you have to put the work and boots on the ground. That's the only way to do it.
Thank you so much. I would love to be there when you were raising hell. I think it'd be quite the spectacle, and I'm sure most effective. So thank you very, very much, Amber J, for if you can just stay with us to the end. But thank you very much indeed for your contribution and your passion. Over to you, Rebecca, for your comment on, to the people who are listening with your hat on as it is now.
I think Amber's covered a lot of it. It's, if you've got money to invest and you're an investor privately, be selective, do your research. There's so many more financial products you can now acquire which have that research behind them. And so do your own research. But, as a citizen, vote. vote with your climate hat on, and don't accept that that climate isn't part of the debate. So, it's how you spend your money, how you invest, how you vote. And I would say the other one is understand and challenge your employers about their emissions. Many of you on the call, you might be consultants, but you also might be working with partners, or you're an employee. Challenge your employer about what they're doing, understanding their own scope 1, 2, and 3, and be an activist at work, as well as in your community and with your own wallet. Because, you might think, well, they're all small things, but we've seen in the last 5 years so many examples where small things become really big. And that example you talked about with supermarkets in Australia, that became a huge issue that the media grabbed hold of. And then people stepped back and said, you know what, those guys are being the good guys and they're doing the right thing. And I think it turned around, it didn't take too long. The short-term pain was short. And in the end, they won that one because, I won't mention them, I'm not promoting them, but they won that one.
Not mention them.
They were taking the right action and they stuck with it. So
absolutely.
Spend your money with companies who are not greenwash companies, because there's a lot of those, but spend your money with companies who are taking real action. And fessing up as well, because some of it is just, being open and not being, let alone climate deniers, greenwashers. So give people and companies who are having a decent go, give them a chance. Thank you.
Absolutely brilliant. And look, thank you very much. What a treat it has been. As you said, everything, so many good things have been said. One of the things that I try and compel people is the planet will survive. It may not survive in the way that we know it. We won't. So if that's not enough to make you want to act, I actually just don't really know. All that being said, and, not all of my actions are congruent with everything I believe. So do I give up? Do I forgive myself? Do I do nothing that's congruent with what I believe? So I think looking at the actions that we are prepared to take, taking more than maybe we did yesterday, using our influence more wisely, more determinedly, I think those things really matter, because at the end of the day, apathy is easy to set in, or it's just too enormous, the challenge is too big. That is genuinely accepting a doomsday for us as humans. So I think finding a way to make constructive choices and to use your influence wisely is really, really important in whatever capacity that you might be joining this call, and those that you can encourage in your network around you. So Francesca, you've asked that the chat and the Q&A be saved. I'll leave that for Nigel or Paul. Again, I want my final thank you to be to the audience. As much as I can't see you on the screen, which I truly miss those days, but at the end of the day, you make this what it is, not just by listening, but what you choose to do afterwards, and by your fabulous questions and giving us encouragement to put on events like this, so that we know that it actually matters. And for some of us, that really is sustaining in of itself. So thank you so very much. I will hand over now to you, I believe, Nigel or Paul. And thank you again for having me as a host on ESGX. Happy International Women's Day.
Fantastic. Thank you very much, Cassandra and Rebecca and Ambajaya. That was a really fascinating and uplifting discussion. As always, I knew it was going to be. We could go for much, much longer, but I think there's a lot everybody can take away from this to think about and to act on. And it always comes back to action and where can you act? And clearly there's plenty of places you can do this in your own life, whether we're talking about things to do with diversity and themes very relevant to International Women's Day, but also things related to climate change. You can advocate for your company to do something different. If you are one of those employees of a tenant of one of the big property companies, or you are the tenant yourself, ask them where they get their energy from. If the property company is not yet buying renewable energy, there are plenty of places you can advocate for change. There's a company pension scheme that isn't run along appropriate lines. Go and agitate for change there. In Australia, you have your own superannuation. Put it somewhere that invested accordingly. I did that some years ago, and it has performed amazingly well. Think about your philanthropy and advocacy and find ways to act. So thank you so much for joining us. Coming up in the next couple of weeks, we have two very topical episodes. The first is on the future of electric vehicles and power storage, and that's on the 22nd, so in a fortnight's time. And then the week after that, we have an episode about electrifying the built environment. So this will be combined with our regular Green Jobs episode, and we'll then dive into net zero buildings and cities with several guests who are absolutely in the detail of how to do this in practice, and across the challenges that there are related to diversity, equity, and inclusion, which we cannot ignore. So thank you very much for joining us, and we look forward to seeing you again very soon.